An ABLE account can help an eligible person save for disability-related expenses without treating the whole balance like an ordinary SSI resource. But the phrase "save without losing SSI" needs guardrails. An ABLE account is a tool, not a magic pass, and the details changed in 2026. Tiffany will help us separate the headline from the rule, and before we close, we will turn it into a short verification order.
So the first question isn't how much can I hide?
Right. The first question is whether the account and the person fit the current ABLE rules. Then we ask what the money is for, how much is in it, and which benefit program we are protecting.
SSA's public SSI guidance says the first $100,000 in an ABLE account won't count toward the SSI resource limit. That is the headline, but it is not permission to stop tracking every other resource or every other program.
The account gets a special lane. The person still has to drive within the lines.
Exactly. An ABLE account is designed for qualified disability expenses, and the IRS describes distributions as tax-free when they are used for qualified disability expenses. Keep the purpose and the receipts connected.
And if the balance or the expense doesn't fit the rule?
Then the first repair is documentation, not panic. Write down what the money is for, which account it came from, and which current rule you relied on. A clean note can help a benefits counselor see the whole picture instead of guessing from one balance number.
That matters because an ABLE account is not the same thing as a general-purpose account with a new label. The account has a beneficiary, a plan, investment choices, distribution procedures, and an expense standard. Those details belong in the file before the first deposit.
And the first $100,000 is an SSI resource rule, not a promise that every agency will ignore every dollar. If you receive housing, food, Medicaid, or another benefit, check that program's own treatment. One favorable sentence cannot answer a multi-program case.
So the practical split is simple. What does SSI count? What does the plan allow? And what does the other benefit program require? Keep those three questions on separate lines. Combining them is how a helpful account turns into a confusing record.
There is also a human reason to slow down. The person opening the account may be balancing medical costs, transportation, housing, work, and family help at the same time. A benefits rule can be accurate and still be hard to apply when the paperwork is scattered. Put the current source, the account statement, and the planned expense in one folder so the next conversation starts with facts.
That folder should not contain private information in a public comment. It should contain the source link, the date you checked it, the question you asked, and the answer you received. If a rule changes, you can see which decision needs a fresh review. That is the difference between using an ABLE account deliberately and treating a social post like an approval letter. Then ask before moving money. The safe mental model is eligibility first, account second, expense third, records always. The official SSA page is useful because it puts ABLE beside PASS and other programs instead of pretending one account solves every benefits question. Professor Ferreira will show why the 2026 deposit number still needs a plan level check. Next, Professor Ferreira helps us separate eligibility from the 2026 deposit math. Real quick, because this next part matters to you. If any of this is helping, tap that like button, then hit subscribe and ring the bell so the next one finds you. Both are free and take about a second, but they tell the algorithm to show this to one more person who needs it. Professor Ferreira, what changed in the eligibility conversation this year?
The age-of-onset rule expanded in 2026. Before January 1st, the federal rule generally required the disability to begin before age 26. The updated guidance uses before age 46, but the person still needs to meet the disability requirements and the plan's enrollment process. Coming up, Tiffany will separate the direct contribution cap from the Able to Work addition.
That is a bigger door, not an open door for everyone.
And deposits have their own ceiling. The ABLE National Resource Center lists $20,000 as the direct annual contribution limit for 2026. That is the calendar year deposit number, not the amount every person can safely contribute without checking income, benefits, and plan rules.
A contribution limit answers how much may enter under the federal annual rule. It does not tell you how much cash to keep available for rent, how a state plan invests the balance, or whether an employer contribution changes an Able to Work calculation. Those are separate checks.
The calendar matters too. Before sending money, confirm the plan's posting date, any returned contribution process, and whether someone else has already contributed for the beneficiary. A limit is easier to follow when the account record is current.
For an employed account owner, able to work may allow an additional contribution up to the lesser of earnings or $15,650 in the continental United States under the conditions the program lists. It is an extra rule, not a replacement for the base limit.
And employer retirement contributions can affect whether that extra amount is available. The phrase employed owner is doing real work in the rule.
So do not add the base limit and the extra amount automatically. Check earnings, employer retirement contributions, residence, and the current plan instructions. If one condition is missing, the larger number may not be available to that account owner.
The same caution applies to the plan balance. A state plan may advertise a high maximum, but that number is not a spending recommendation, and it is not a guarantee that SSI, Medicaid, or a housing program will treat the balance the same way. Ask which rule is being discussed every time someone gives you a number.
And keep the answer attached to the right person and the right program. An employed owner may have an able-to-work option, while another beneficiary may not. A state resident may see a different plan balance limit from someone in another state. Current plan documents beat a universal graphic.
So 20,000 is not a target. It is a limit.
Correct. The same ABLE resource page says state plan balance limits vary. The 2026 range it reports is $235,000 to $596,925. A high plan balance limit still doesn't answer whether a particular deposit, expense, or benefit interaction is right for you. Before we get to the close, write down the plan's balance limit beside the deposit rule.
The sequence is simple to say and important to follow. Confirm eligibility, choose a plan, understand the deposit limit, then name the expense before you spend.
And keep the plan disclosure. The fine print is not decoration when the money protects a benefit.
Here is the safe checklist before a large transfer. Verify, name, document, and ask.
First, verify eligibility and the date of onset rule with the current ABLE program or a qualified helper. Second, read the plan's fees, investment choices, balance limit, and distribution instructions. Do not choose a plan from a headline alone.
For the eligibility file, collect the date of onset information and the supporting disability documentation the program asks for. Do not post those records publicly. A helper can review what is needed without asking you to put a diagnosis, account number, or notice into a comment thread.
Third, name the expense before the withdrawal. Housing, transportation, education, health, and other disability-related needs may fit different rules, so use the current plan and IRS guidance rather than an old social media list.
Fourth, track deposits and receipts. A separate account does not make record-keeping optional.
The word qualified is doing work here. A receipt alone does not prove that an expense qualifies, and a familiar expense category does not remove the need to read the current plan instructions. Keep the invoice, date, amount, and reason for the withdrawal together.
If you are unsure, pause the transfer. A short call with the plan, SSA, or a qualified benefits counselor can be more useful than trying to reverse a transaction after a notice arrives.
The IRS page is the receipt for the tax side. ABLE funds can help pay qualified disability expenses, and distributions are tax-free when used for those qualified expenses. It is a tax rule, not an SSA promise about every other benefit.
And the SSI boundary? Leo, this is where a balance and a benefit program have to be checked together.
SSA's guidance says an ABLE balance above the SSI disregard can suspend SSI cash benefits while Medicaid may continue under the applicable state rules. That is exactly why a person should ask before a large transfer and keep the accounts balance beside the rest of the resource inventory. So the honest summary is not save anything and you are safe. It is use a current ABLE plan for a documented qualified purpose, respect the deposit and resource rules, and verify the interaction with the benefits you actually receive.
Finally, review the balance as part of the full resource inventory. An ABLE account can create room under the SSI rule, but it does not erase bank accounts, vehicles, property, living arrangement questions, or another program's rules.
When you review the inventory, use the same date for every statement. Note deposits, withdrawals, reimbursements, and transfers. If a notice later asks what happened, a dated ledger is easier to explain than a memory assembled months afterward.
And if the account is already open, the checklist still applies. Reread the plan disclosure when the rules change, save the current IRS and SSA pages, and ask before a large move. The goal is not to predict every agency decision, it is to make the next decision traceable and supported.
A good review can fit on one page: current eligibility, current plan, current balance, planned expense, and the person or agency you will ask if something is unclear. That page does not replace official advice, but it makes the question specific enough to answer.
If the answer changes, update the page and keep the old version with the date. Benefits work is often a timeline. The safest record shows what you knew, which source you used, and why you paused or proceeded.
That timeline also helps when a family member or authorized helper is involved. They can see whether a question is about eligibility, a contribution, a withdrawal, or a different benefit. Clear categories reduce the chance that one person's experience gets mistaken for a universal rule.
And remember the limits of a video guide. This explains the current framework and points you to official sources. It cannot decide eligibility, approve an expense, or promise a result for a particular household. Use it to prepare a better question and a better record.
If you remember one sentence, remember this. An ABLE account can be valuable, but it works best when eligibility, deposits, expenses, and receipts are checked as one connected process. The current source page and the current plan disclosure belong beside the statement, not somewhere in a browser tab you may never find again.
That small habit protects the future version of you who has to explain the account. Save the page, mark the date, keep the statement, and write the question before you call. Those steps are modest, but they make a complicated benefits decision much easier to review.
The point is a safer next step, not perfect certainty. Verify the rule, document the answer, and ask before the money moves.
That is how the account stays a tool instead of becoming another surprise in the benefits file. Keep the source, the statement, and the question together.
That simple habit matters for the whole benefits file.
That is the real benefit of a careful ABLE process. Not a promise that no rule can affect you, but a record that helps you catch the rule before the transfer, the withdrawal, or the notice becomes a crisis.
That gives viewers a usable order. Check the rule, check the plan, then move the money.
Like and subscribe for more benefits guidance that turns a rule into a safer next step. Which ABLE rule will you verify first? Eligibility, deposits, or expenses? Until next time, take care.